Hi coders, in this lesson I'm going to show you how to access the Federal Reserve balance sheet data and analyze that data on your charts using PineScript. So first of all, we're going to use the QUANDL inbuilt function for this, which is this guy here. And this function, if I control and click on it, takes a ticker code just like a security function would in order to know what data to access from the QUANDL service. So if I go over to the QUANDL website here, this is showing the Federal Reserve balance sheet data, and this is the QUANDL code that we need to give PineScript in order to access this data. So if I just copy this code here and go back to my Pine editor, and we go to a blank script, I will show you how to achieve this. So let's remove this indicator for now and start from scratch. So the first thing we need to do is get the current balance sheet. So to do that, I'm going to create a new variable here called current sheet. And I'm going to set this to the inbuilt QUANDL function. And I'm going to paste in the ticker code I just copied from the QUANDL website. And next up, this QUANDL function takes two more inputs, a gaps setting. So we're going to set bar merge to gaps off. And that will turn any gaps in our data off. And we're going to access the zero index. So if I go back to the QUANDL website, you'll see that this particular QUANDL code only has one set of data. If we go to table, it only has a date column and a value column. So that makes this very easy to work with. All we need to do in order to access this data is reference the zero index or the zero column, the very first column of this data. So now we are getting our current sheet data. In order to do anything useful with this, first of all, if I just paste this into the plot function and we save the script and add it to our chart, we're now plotting the balance sheet to our chart. But in order to do something useful with this information, we need to analyze it. And so in today's lesson, I'm going to show you how to analyze the percent change between the current sheet and the last data value that we had from this data source. So first of all, let me add a comment in here. So get current Federal Reserve balance sheet. And then we can create a couple of new variables. So I'm going to create some persistent variables. So these variables do not change on new bars. Whatever I set these variables to, they will be saved across all the bars on my chart until I change them. So we're going to create a balance sheet variable. And by default, this is just going to be assigned to the very first balance sheet QUANDL data value that we retrieve on the very first candle on our chart. So this variable will be initialized with the current sheet value. The next thing I'm going to do is create another persistent variable called balance change. And it's going to be initialized as 0.0%. This is going to be our percent change value. The next variable I'm going to create is our asset price. So this is going to be set to, by default, on the very first bar on our chart that loads, it's going to be set to the closing price of whatever instrument we have loaded. And then I'm also going to create another persistent variable called asset change. And that's also going to be set to 0.0%. And then finally, I'm going to create a non-persistent variable, or just a regular variable, a Boolean variable called draw change. And that's going to be set to false by default. And this will be the Boolean we set to true whenever we want to plot our shapes to the chart, which will be used to represent changes in the balance sheet data and our underlying instrument data as well. So the next thing we need to do is detect if there was a change in the balance sheet. So I'm going to add a new comment here that says if the current balance sheet has changed since last time, calculate the percentage difference. The next thing I'm going to do here is create a if statement, and this is going to detect if our current sheet is not equal to our saved balance sheet, which is this variable here. So as soon as we get a new change in our balance sheet data, this if statement will be executed. So here I'm going to then set our balance sheet to our current sheet. And then next up, we're going to calculate the change between these two values, our current sheet and our previous balance sheet. So in order to calculate the percentage change, we need to minus 1.0 from the previous balance sheet variable. We use the historical operator to access that information. And then we're going to divide that by the current balance sheet, which we just set here to our current sheet value. And then we're going to times that result by 100 in order to convert this into a percentage. And the next thing I'm going to do is get our asset change. So our asset change is going to be exactly the same formula here. So I can copy and paste that in here. And we're just going to change this to say asset price, which is this persistent variable here, divided by the current closing price. And that will get us the percentage change of our underlying instrument from the previous change in the balance sheet to the current change. So this will all make sense in a second when we're drawing this information onto the chart. So if you're not following yet, don't worry, this will make sense in a second. The next thing we need to do is assign our asset price to the current closing price, so that next time the balance sheet changes, we can calculate the price change in terms of percentages. And then finally, we need to set our draw change boolean to true, because now we want to draw our data to just say plot this data to the chart. So now I can change this to say balance sheet. So we're plotting our persistent balance sheet variable, and I'm going to set the color to color.blue, and I'm going to give it a title of balance sheet. And then our next plot is going to be the balance change, and we'll give this a color of color.purple. And I'm going to set the transparency to 100% on this plot, because I don't actually want this plotting onto the indicator. I just want the value plotting up here so that we can see the percentage change as a number. We just want to see the value in our indicator box. So next up, I can title this one balance change percent. That's that plot done. Let's move on to our next plot, which is going to be our asset change percentage value. And I'm going to set this color to color.navy. I'm going to leave the transparency off on this one so that this one does draw onto our indicator box. And I'm going to title this one asset change percent. And so now if I save the script, we'll be getting a couple more variables plotting onto our chart. So the purple number here, just above my mouse cursor, is the percentage change in the balance sheet. So you can see here that when I hover over this period of time in here, we had a 7.632% increase in the balance sheet. And then on this next bar, where the balance sheet value jumps up, you can see we had an 11.154% increase in the balance sheet. And then our next number there is the difference in the underlying asset price between these changes. And so if I zoom in here and I make this chart a little bigger, you'll see that when the balance sheet was increased here, we had a 2.49 or 2.449% increase in price since the last change in the balance sheet. So here you can see this is when the balance sheet last jumped up 7.632%. And this candle close here is what is being saved in the script by asset price when that change was detected. And then the next time a change in the balance sheet was detected, price had moved up 2.45%. So now let's draw symbols onto the chart to represent these changes in price and the balance sheet. So if I come down here, I'm going to create a new comment here, just call it plot shapes to show positive and negative balance sheet changes. We're going to use the plot shape function here. And I'm going to reference our draw change boolean. So whenever the balance sheet changes, this boolean will be set to true, and this plot shape function will be executed. So I'm going to use a conditional operator here and say, if the draw change boolean is set to true, and our balance change is above 0, so it was a positive change, then we want to draw our shape, and we use 1 in order to tell PineScript to draw that shape. Otherwise, we want to draw NA, and so nothing will be drawn onto the chart. And then we need to close off our original condition, which is draw change. And if this is set to false, then we also want to draw NA. So we've nested two conditional statements into one here. And this will only draw the shape if we have our draw change boolean set to true and the balance change percentage was positive. So now we can say set the style to shape.arrow up since it was a positive change. And we'll set the color to color.green. And we'll set the location to location.top, and we can title this positive balance change. So now if I save the script, we'll be getting green up arrows whenever our script detects a positive change in the balance sheet value. And so now all we need to do is copy this line of code, paste it down here, flip this operator here to less than 0. So we're detecting a negative change. Change this to arrow down and color to color.red. We'll change the location, or we'll leave the location as location.top, but we'll change this to say negative balance change. So now if I save the script, we are drawing green arrows whenever the balance sheet increases and red arrows whenever the balance sheet decreases. So far so good. Let's now also draw our arrows for changes in the underlying price of the instrument we're analyzing. So I can just copy this entire block of code here and paste it down here. I'm going to change this to say asset changes. So we're going to plot these shapes to show positive and negative asset price changes. Add price in there as well. And so here I can just copy our asset change value. And so if we detect a change in the balance sheet and that change is above 0, so it's a positive change, then we're going to draw this green arrow. And we're going to change the location of these arrows to location.bottom. Paste that in there and change this to say asset. So now if I save the script, we are drawing two sets of arrows here. So the top set of arrows is analyzing the balance sheet, and the bottom set of arrows is analyzing our percentage change in the underlying instrument price. And so this section through here, this sort of volatility that was caused by the COVID outbreak, if we zoom in here and we can see how the Federal Reserve reacted to this crisis by increasing the balance sheet, buying a lot of stocks, bailing out a lot of companies. If we zoom in a bit here, you can see that as the balance sheet began to increase, so did our percentage change in price. So there was a little bit of a delayed reaction here. You can see that initially the Fed began increasing the balance sheet, but price action was still moving lower. That's just because of fear in the market. But as soon as the market bottomed out and the Fed began to really ratchet up their balance sheet increases, our positive changes began to kick in. So there is definitely a correlation between the federal balance sheet and US stock prices. And so to dig a little deeper into what this script is doing, let's just zoom in here. And so you can see through here we had some pretty significant steps up in the balance sheet. So if I hover my mouse over this line here, and I'll put in a horizontal line just so you can see what bar I'm hovering over. On this bar, we had an increase in the balance sheet, but price had declined slightly, 0.442%, since the last change in the balance sheet, which was all the way back here. So when this balance sheet change occurred, price was hovering here. When the next balance sheet change occurred, price had declined by a fraction, 0.442%. But then the next time the balance sheet increased, which was all the way over here, we had a 10.2% increase in the S&P 500. So if I hover my mouse over the closing price of this previous balance sheet change, and we measure out the difference to this balance sheet change, we get around 10%. I'm a little bit off here because it's hard to get the mouse cursor exactly on the closing price of these two candles. But according to our script down here, this navy number, we had a 10.2% increase in the underlying asset after the balance sheet increased. And so what we've basically created here is a leading indicator. So this indicator, whenever we get a green arrow plotted here, that means that it's not certain, but certainly likely that price is going to move up. And depending on the magnitude of the increase in the balance sheet, that will determine the volatility of the price rise. So you can see here as the balance sheet began to step up dramatically, so did price. And then as these balance sheet increases began to slow down a little bit, price began to roll over a little bit. So this is a very interesting indicator. And thank you, Anthony, for suggesting this lesson. I hope that you guys find this helpful. And I'm very curious to see how you guys use this sort of information in your own scripts to analyze fundamental data against price action. The source code for this lesson will be below, and I'll see you in the next video.